Last month of stats was a little bit more of a usual month of stats, with the 275 to 300, 325 being higher. But the interesting thing to note about the stats was there was quite a noticeable peak down in up in the $1 million range, 1 million plus properties.
Okay, so how many homes have sold?
So in Tauranga, 8 properties were sold over $1 million, and the Mount 13 properties were sold over $1 million. So there's noticeable increase, 3 to 4 times the amount of a normal month selling in those areas. Total for all of Tauranga was 119, which is pretty well what you'd expect out of a February. The years before were 125 and 117, so you're expecting February's a bounce back month where you get solid sales. In relation to what has been happening over the last 3 to 4 months, it's been a solid month.
So what impact are we seeing now from the Reserve Bank rules?
I think we're seeing a slight change in that. The first home owned buyers, I feel, aren't back, and the people that I talk to say that they're not back either for them. But the investor buyers seem to be coming back to the market. So that's giving us that indication in that 275 to 300, 325 mark bounce back. There'll be more the investor buyers buying in there.
Looking ahead, we've just come off 4 years of very low interest rates and they're going to start to rise now. What impact do you expect that's going to have?
I'm expecting that the impact for real estate's going to be that people want to do something. They'll be sensing that interest rates will increase, so therefore the buyers want to isolate the interest rates that are available at the moment and not want to have to pay more, so they'll be buying now, and so therefore it'll create an urgency for buyers to buy, and so then sellers will take advantage of that.
With the extra pressure that the rising interest rates might add, do you think that will raise prices in the short term?
I don't think it will raise prices. I think that we've been quite stable with prices, and supply and demand would have suggested that the prices should have gone up, but they haven't. So I can't see a huge raise in prices. What I think that we'll just have a lot more activity and a lot more people will get bought and sold and move.
What do you think will be the long-term impact of the interest rates on the amount of sales?
The long-term impact of interest rates on sales, in my observation over the years, that interest rates in themselves haven't driven a change in the market. There's been an environment where they've aided to that, and because they have been there and other things have been there, then sales have gone forward. But in themselves, then I don't know how much of a change it will cause. So in this case, will it cause the next 6 months? Will it make a huge difference? I think it's steady as she goes. Personally, there may be an increase, but I can't see it taken off because of that.
Are we still seeing the shortage of listings versus number of buyers that we've had for the last few months?
We still are, but it has been a bit better this month. There has been more properties come to the market. And I think with that spur of the investors coming back, I've noticed that through that up to 400, there's been an increase in properties in that market coming to the market. It's probably still at 450 to 600. There's a little bit of a shortage still, but there are more coming, but still a shortage.
So sellers can still expect a relatively short time on the market?
I think if sellers come on and present their property well and then price their property well, I think that that we're seeing properties come and go within weeks.
Yeah. And your advice to buyers is staying the same?
My advice to buyers is staying the same, is to be, if you're finding something that is of interest to you and you do want to move, then if it's the right house, move on it.
For the first time, we've got more people are renting than owning a home. What's impacting that?
I can only think that it's been driven by the Reserve Bank's decision with its loan to value ratio, and that the first home owners aren't coming into the market and they're having to choose to rent. So therefore that's pushing up the number of people renting, and so then the investors are taking advantage of that.
Yep. And how does that change the market at all? The fact that we're seeing more investor buyers than home buyers?
The thing that I notice with investor buyers is that they tend to buy more on numbers. They don't buy on emotion. So therefore the prices that they pay will be based on the numbers that will be returned and their view of capital value. And so therefore that they will look at what's happening in the market and they will not pay over the market price for them.